Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that'll be flashing on your screen. Each time you write to us, do remember to mention your name, the location that you're writing to us from. Mention that as well, along with the buy price, the quantity, and the time horizon in case you've bought a stock. And if you've not bought the stock, also mention the time horizon, because in that way our experts will be able to help you better. Talking about our experts on the short-term to medium-term queries to get those queries resolved, we have Kunal Bothra, who's joining us on the technicals, while on the fundamentals for your long-term queries, for your investment ideas, we have Mr. Chokkalingam joining us on the show. Very good morning to you, Kunal, as well as Mr. Chokkalingam. Thank you so much for joining us on ET Now. And let me kickstart taking the queries then. The first query is coming in from Kanak Kotari, who's writing to us from Ahmedabad. And Kanak has Engineers India in the portfolio at a price of around 174 odd rupees. Engineers India about 3,500 shares. Wants to know what to do with this particular company right now. And Mr. Chokkalingam, Engineers India over the last 3 months have seen a rough ride, but yes, this one also was one of those PSU beneficiaries when the entire pack actually rallied.
As you said, a lot of such PSUs have ran up beyond their fundamental comfort zone. He should sell Engineers India. He can consider Coal India, another PSU, but it's a large cap with a high dividend yield. Coal India expanding consistently coal output. It's also now getting into expansion of thermal and renewable power sources, and also diversifying into minerals other than coal, looking for acquiring lithium-based minerals. So all these are positive development. Stock still trades at a single-digit PE, and that's one of the best stocks in the PSU pack.
All right, that's the take coming in on Engineers India. We're moving on, and Kunal, the next query that I have is coming in from two viewers, but the stock is same. One of them is from Nikhil Sharma, and the other one is from Shekhar from Bangalore, and they both want an advice on L&T Finance. As per the range, Nikhil as well as Shekhar's buy is near around 180 odd levels. Kunal, what's your view? If you can share your short and medium term view for this particular stock.
So I would be bullish on L&T Finance at current levels also. My sense is that the stock is now looking very attractive. So over the last 1 week, the stock slowly and gradually found its momentum back. I think at 180-85 plus level where it's trading right now, I would suggest a hold. My short term to medium term targets on the upside for L&T Finance would be 225. So medium term targets are 225 for the stock. Short term wise, I would expect 192 to 196 as a near term target range for L&T Finance. So maintain the bullish stance on the stock.
All right, this next one is coming from Prathamesh, writing to us from Mumbai. Once again coming to you, Kunal. He wants to know about Tata Elxsi. He wants to know whether it can be bought at current levels for a period of 6 months, or overall wait for the market actually to see some sort of a correction and then go ahead and buy this one.
So you can start buying in small quantities. I'm not sure whether the markets will provide you that immediate correction or not. But I think at current levels, Tata Elxsi is also come back from its previous swing highs. I think 9,000, 9,200, if I'm not wrong, was the high the stock had made end of August, start of September, and it's currently sub 8,000 levels, which means you're not buying the stock at a premium, you're buying the stock when the momentum is cooled off. So I think both in terms of the price, risk reward, as well as the market positioning, this could be a good time where you may look to start at least buying in stages for Tata Elxsi.
Right, Mr. Chokkalingam, very good morning. The next query that I have is from Kaushik Mitra from Mumbai, and his query is it wise to sell IRCTC and rather buy IRFC or any other railway counter at this price? He's been holding IRCTC at an average price of 723 rupees, so he is at a profit in this particular counter.
IRCTC is better than other PSU stocks, though IRCTC also slightly stretched in valuation, but then definitely long-term growth prospects remain intact. So I would give a hold call on IRCTC.
All right, so that's the take coming in on IRCTC. Let me take this next query then. And actually talking about the entire PSU space, a lot of queries have been coming in for that particular segment, Mr. Chokkalingam. Let's try and address this entire, maybe one by one, let's talk about the entire defense play in the PSU pack. So we have Gaurav from Bangalore. He wants to know whether it makes sense to go ahead and buy likes of HAL, BEL, or matter of fact BDL at this point in time, or wait for some more correction. He's one of those viewers who's not bought into the counter, now is looking to enter, and looking at the way how these stocks have corrected, I'm sure he must be waiting for some more attractive price to come in. But do you think this level also is an attractive one if you have to buy these quality defense counters?
Defense counter, no doubt about it, but one should remember the fact that the mid-cap space is highly cyclical. Last 20 years has proven that point, and they don't linearly grow the market cap. And second, the PSU pack itself is cyclical historically. In the last 30 years, if you see, there is a huge swing. Now, third fact is that most of these stocks have rallied, even though some of them corrected 20-30%, still there is no valuation comfort. So there are very few stocks which have valuation comfort. As I already mentioned, Coal India. The second stock could be Balmalari Company, because that particular stock has not participated in the current boom in the PSU stocks, and we also personally invested in Balmalari Company. These are the only two PSU stocks we have a buy rating. Otherwise, we are still nervous on mid cap PSU pack. I firmly believe that ultimately one more shock should come to mid cap space, including overvalued PSU stocks.
Right, moving on to the next query that I have, and Kunal, let me take it from you because Jay wants a technical view on Varun Beverages. He's already holding 1,000 shares and his buy price is 650 rupees.
See, after the corporate action, the stock has now almost at 615, 617 mark for Varun Beverages. Now, interestingly, the stock has gone through two retests of close to its 200 moving average. The short-term charts are a bit iffy for Varun Beverages, because today the stock seems to be coming back below the 50-day moving average. So I would suggest that if you are looking to buy or add further for the stock, then just wait out for one more leg of confirmation on the upside. Yesterday's high, if I'm not wrong, for the stock was around 635 mark. So let it cross the 2-day swing high. That could be a point where you may look to start buying or nibbling into the stock.
All right. This next query that I have is coming in from our viewer, that is Kaushik Mitra. No, Kaushik Mitra's query has been taken. This one is coming in from Rakesh from New Delhi. He's a senior citizen, and Kunal, he has a couple of stocks that he has actually bought, and he's saying he's recouped his notional losses on the stocks as they had gone below his buy price by a wide margin. He bought IndusInd 100 shares at a price of 1,443. He has Hind Copper as well at 333 and Axis Bank at 1,180. Should he still hold on to these counters or look to exit any of them?
See, I think you can continue to hold on to the stocks, but I'm not sure whether these are the best performing names in the private sector banking stocks, for example. So, for example, other than IndusInd Bank, you've actually seen ICICI Bank and HDFC Bank. They've done pretty well for themselves. It always makes sense to go with the leaders in terms of price performance. So, if you can make that switch from IndusInd Bank towards maybe an ICICI Bank, which is I think corrected a couple of percentage points in the last 3-4 days, that could be a better strategy. Axis as well as Hindustan Copper, I would suggest to hold both of these names.
All right, the next query that I have, Mr. Chokkalingam, is coming in from Gaurav from Bangalore, and his query is, after the recent correction, will that be a good idea to go ahead and buy stocks like HAL, BEL or BDL, or wait for some more correction and then enter for the long term?
These PSU defense companies, they are high quality, no doubt. But as I mentioned, the valuation comfort is not there. If they fall at least another 10-15%, they might look a little attractive for the long term.
All right. This next question that I have is coming in from Gaurav, who's writing to us from Bangalore, wants to know, or Gaurav's is taken, this one is coming in from Rebecca, writing to us from Kolkata, wants to know about IndusInd Bank. Kunal, you did talk about IndusInd just now, but she's been holding at the levels of 1,530. Should she stay put, though you've said that for the previous answer that they are not the quality names or the right names or better attractive names in the pack, that they are not quality was the wrong word to use. But what's your take for the 6 months, for the next 6 months she should hold, and what's the target?
See, I'm assuming that IndusInd Bank would be a part of your core, a rather larger banking portfolio. If that's the case, then you can hold on to IndusInd Bank from that 6-month perspective. My only point which I was making earlier was that ICICI Bank and HDFC Bank have been better performers on relative basis. Now, when a sector gets into a breakout, the leaders are the ones which charge premium, and they are the ones which continue to move up higher, irrespective whether these stocks they remain a bit more sideways for a few off days. But I believe that in that context, ICICI Bank and HDFC Bank could be better bets. But as I said, my assumption is that you're looking at a potential, few more larger cap names which you may be holding as part of your core banking portfolio. So I think in that context, you can continue to hold on to IndusInd Bank. But as I said, if there are no banking names in your portfolio, then it makes sense to switch to ICICI Bank.
All right, Kunal, the next query that I have is also coming in specifically for you from Jay Krishnan, and he wants a suggestion on entry levels for Dixon as well as UltraTech for the medium term. And do you like also any of these stocks for a fresh entry?
So Dixon, I think closer to 13,400, 500 could be better bet, because I think that was the low the stock made on the last, I think 1 week or 2 weeks of swing pattern for itself. UltraTech Cement, the stock is confirming a breakout. But my only point which I have seen for UltraTech Cement is that whenever the stock gets into a breakout, it eventually goes into a retest of the 50-day moving average, which at current levels is at 11,500 mark. Buying this on dip generally rewards quite well rather than buying this on breakout. So I would suggest to just wait out for UltraTech Cement, but I think Dixon at 13,400, 500 could be better bet.
The next query is coming from Gautam. He's writing to us from Mumbai. 4,000 shares of Ashok Leyland is what he has in his portfolio, Mr. Chokkalingam, at a price of 196 rupees per share. Should he hold or look to exit, or instead buy another auto stock? What's the take coming in on Ashok Leyland? This one is not part of the 4-wheeler or 2-wheeler pack, but a CV maker. What's your take on this one?
Yeah, definitely Ashok Leyland is a great automobile player, but if you go by the current sales of commercial vehicles, that's not doing well. Even the rating agencies have projected, subdued performance of CV segment within the automobile. So therefore, I would suggest sell, and you can consider tire stocks. Though they are part of automobile sector, the replacement demand accounts for 2/3 of their total sales. And suddenly oil prices crashed, and even the natural rubber prices have come down by more than 20,000. So something, you can replace it with a tire leaders like MRF or Apollo Tire.
All right, moving on to the next query. And Kunal, okay, Mr. Chokkalingam, let me take it from you, because this query is from Sushila, and she wants to know, will that be a good idea to go ahead and buy NBCC at current market price?
No, I studied it. I am not comfortable with the valuation of NBCC.
So that's the take coming in on NBCC. This one is coming in from Nalini Subramanian, who is writing to us from Chennai. Wants to know about Praj Industries. Kunal, 30 shares at an average price of 362 rupees per share. Wants to know whether to hold or book profits partly, or if you say to exit otherwise, which other stocks she can go to invest in?
No, I would not suggest an exit on Praj. I think I would suggest to hold on to the stock, irrespective that the stock has moved pretty well over the last few months. I think even at current levels of 800, 820, I still believe that the stock still looks quite strong. The trend has been very, very stable for Praj Industries, and the stock in the last 1 or 2 weeks is trying to get back into a mild breakout mode also. Volumes have been very attractive. All of those features are ingredients of a stock which you would want to keep in your portfolio and hold on to the stock.
All right, but with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back to take more of your stock. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And continuing the same, the next query that I have, Kunal, is coming specifically for you. The viewer actually didn't share his name, but let me take his query. This one is on Sadhana Nitro. He wants an advice for the long term, any target price to look out for in this one, and he also has 2,000 shares of ITC. What price he or she should actually go ahead and think to move out of this one?
So both the stocks I would suggest to hold. I was looking at the charts for Sadhana Nitro. The stock has made a very strong comeback from I think 200 to 179 or 185 approximately. It had hit I think 1 or 2 months back towards a move back again about the 200 plus mark. So I would suggest to hold on to the stock. Looks like that the stock is going to looking like to restart a major uptrend for itself. So I would expect higher levels, say closer to 240, 250 also could be possible if the market sustains this leg of momentum. ITC also I think has been a phenomenal bet, and the best part about ITC is that the stock is coming back after almost 3 or 4 quarters of price correction consolidation. So this could be the first quarterly move where the stock has managed to come back after those 3-4 quarters of pause, which means potentially another couple of quarters of strong price uptrend could be in the offing for ITC. Would suggest to hold.
All right, moving on to the next one, and the next query that I have is once again, let me take it from you, Kunal. Subrata Mukherjee wants to know, is this a right time to buy Reliance, considering that 1:1 bonus has been declared, but apart from that, he wants a near-term view on this one.
See, not too much of excitement in terms of the charts, because post the bonus announcement also, the stock has not shown any major breakout moves. So 3100 still remains to be a major resistance for Reliance Industries. You can look to buy, of course, because of the way the stock has been quality, and eventually the stock would probably try to play a catch up with the benchmark indices. And you can't expect that the markets can keep on moving up higher, leaving Reliance Industries behind by for quite some time. So I think in that context there could be a very strong revival which could be possible for the stock price. But just as I said, that maybe from a short term play you may have to wait out for some more time for the stock to try and get back its momentum.
Right, and just to highlight, Mr. Mukherjee, nothing changes when there is a bonus announcement, because yes, indeed, there is an excitement that the stock does show in the near term, but in terms of the whole step is taken to maybe improve and reward the shareholders with one extra share, but financially, there's no change. We're moving on to the next one. The next query that I have is coming in. There are a lot of queries for you only, Kunal, but Mr. Chokkalingam, Manila Raju from Andhra Pradesh wants your view on BSE as well as Tejas Network. Would you recommend for a fresh buy in any of these names for a long term?
No, certainly not. After recommending BSE at 200 rupees repeatedly for years together on the same channel, my heart doesn't allow me to recommend. Not just sentimental. There is no valuation comfort at all. You are getting this BSE at more than 55 PE on current year, whereas the reported price of NSE in the unlisted market is steep discount to this. And secondly, it is very certain that the regulator will bring in a lot of restriction on F&O, as 93% of the investors are losing money. And all this incremental opportunity in BSE stock and its earning came only because of major breakthrough in F&O trades. So I am of the view that once the regulator comes out with a lot of restrictions, it's going to impact BSE very badly. So therefore, I would give sell call. Tejas Network, I do not have a valuation comfort at the current level.
Mr. Chokkalingam, I want to come back to you actually with the point that Srishti was also making about bonus share issue. The query coming in from Mr. Subrata Mukherjee, and for the benefit of all of our viewers, what exactly changes when there is a bonus share that is issued by a company, or when they come about with these corporate actions? Because I'm sure the street gets pretty excited given the fact there's a bonus share, or for the matter of the fact the stock split. What does it, how does it change, or what difference does it make for the investor who's looking to invest in the stock or who's already invested in the stock?
No, very, very interesting and valid question. A lot of retail investors are confused how to treat bonus share and split. The implications are both for both bonus and split are same. What happens if a company, say for example, Infosys, ideal example, the company has grown its revenue and profits over the decades almost consistently. And if Infosys has not given the bonus, any bonus in the last 2 decades or 2.5 decades, if you adjust for pre-bonus, pre-split, the stock should be quoting at 3-4 lakh rupees per share. Then sentimentally, a lot of people will not buy, and the opportunity for PE upgrade will not be great, would not have been great for Infosys. So this is an example. So the point I'm trying to tell is that bonus do matter in the medium to long term, provided the companies make consistent progress on the top line and the profits. Then what happens? Periodic bonus and split enhances the opportunity for a P upgrade through which the wealth creation happens. Because in the absence of that, for a very solid growth company, for example, you take MRF. MRF is still trading at only 28 P. There are so many stocks on the market trading at 50 P, 70 P, any leader you take. So one of the main reason for MRF is not giving bonus and split. So this kind of company which has credible performance over the decades, if they give bonus and split, in the long term, they create a lot more wealth only through PE. So the point is that bonus and split do not alter EPS, but they alter PE, provided those companies maintain the consistent growth and profit. So therefore, the investors need not react in the short term just for the sake of announcement, but definitely they can start liking such companies provided growth is there, and therefore they can accumulate, consistently in a stable manner. So net to net, you have to see whether it's a growth company or not. Then marginally you can reward for bonus split. Otherwise, don't react, remain passive for such corporate announcements.
Thank you so much for that, Mr. Chokkalingam, for putting it into context. Actually, fundamentally, what does it mean? And because the moment you say bonus share, everyone thinks that, oh wow, you're getting 2 shares of that particular company, and that's why you tend to see that sort of an excitement. And we get a lot of actually queries from our viewers asking exactly that, given the fact that the company has announced a bonus share issue, now should I go ahead and buy the stock because, before the record date. So thank you for putting that into context for all of our viewers. But Kunal, let me come next to you and take a technical query that is coming in this one is coming in from Kamal from Pune, and he wants to know about ACE, Action Construction, for the next 2 to 3 months. Any good price to buy it at, and also any good price target that he can keep in mind?
See, last week's price action for Action Construction suggests that maybe the stock is coming out into a revival process, and this could probably have completed a leg of correction which started off in the month of April for Action Construction when the stock was at 1700 levels towards a recent low around the 1250 odd mark for the stock. So I think at current levels you can consider buying the stock with a near term or an expected target, say assuming the next 2-3 months of this uptrend sustains for the stock, then we could be looking at 1550 as a very near term swing target for ACE.
All right, Kunal, one more query coming for you. This one is from Neha from Delhi. Wants a view on JSW Steel. Bought 100 shares. Price is close to 1000 rupees. She did enter this for a swing trade. Any targets that she can look forward to?
1030-40 could be a decent target for JSW Steel. That's where I would probably believe that the stock could take a bit of a pause. It's been one of the better performing metal counters in terms of the stable approach the stock has shown. Yes, the other counters are also high beta, but then I think within a sector which is very high beta, it makes a lot of sense to go with the leaders and the ones which are stable enough. JSW Steel is something which falls into that category. Would suggest a target of 1030-40 over the very near term.
All right, this next one is coming in from Balan, and for you, Mr. Chokkalingam, he is saying that he wants to book profits in Maruti as well as Coforge and look to invest that money in some other counter. I want to ask you, is it a good strategy to go ahead and book profits in a company like a Maruti Suzuki, or for the matter of fact, Coforge, which is also performing pretty well in its mid-cap IT sector? So what's your take? Do you think it makes sense to book out profits from both of these counters and then look to park the money somewhere else, or just stay put with it?
Maruti certainly is a sell in the short term. Of course, long-term prospects remain intact. But in the short term, I expect Maruti to correct quite significantly. It's just to recover, I believe, the Hyundai IPO is coming. So whenever you see related IPO comes, the existing player, they see some momentum. So he can use this momentum to sell, because I believe the passenger vehicle growth is going to remain subdued and it's going to remain very poor single digit. So this is ideal time to sell Maruti. Coforge, I would have a neutral view. In case small cap corrects badly, small and mid cap, the rupee also can come under stress. So IT stock Coforge can remain strong, but there is not much opportunity to make a lot of money in Coforge at current level. So definitely he can either hold or on further rise, he can sell Coforge, and he can definitely replace these with stocks like Dr. Reddy or Reliance Industries, Coal India, or for that matter, we have become extremely bullish on tire stocks now. After 23% fall in the oil prices, 20,000 rupee fall in natural rubber prices, domestic prices per ton in the last few months. So this could be possibly a good, research suggestion for him.
All right, that's the take coming in on Maruti Suzuki as well as Coforge. But the next query that I have, Kunal, is from Balaji from Madurai. He wants to buy KPIT Tech and Power Grid for a long term. Your advice?
So both of them are attractive. KPIT Tech I think has gone through a mild correction recently, and the stock has come back to that 1650, 1700 mark. So looks attractive at current levels. Bullish on the entire tech pack from a medium to long term play. Power Grid also I think has done reasonably well. The stock has been very slow, gradual mover. I think just about last in a couple of days the stock had made a fresh lifetime high for itself, also crossing about levels of 350 plus. So looks attractive. Both of these stocks, you can consider buying the stock at current levels.
All right. So on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock related queries. Then let's continue with the queries that we have already with us. This one is coming for you, Kunal. Actually, let me take both the views coming in from Mr. Chokkalingam as well as Kunal, because we have two viewers asking about the same stock. That's HUDCO. One we have from Santosh from Hyderabad. For the short term, he wants to know how is HUDCO looking to you, Kunal. His buy price of about 303 rupees per share. So he wants to know your advice on HUDCO. While we also have a long-term investor, Mr. Chokkalingam. He's not mentioned his name, but he bought HUDCO at around 281 rupees per share. He wants to know whether you should average at this price and also stay put with this for the longer term. Kunal, first I'll come to you. A target, or what should Santosh do with his holding, as well as what should our other viewers do about averaging HUDCO right now?
So may not be a best price to average, but I would probably believe that if the stock breaks below the 200-day moving average, so that could be closer to 220 mark for HUDCO, which is good 7% from current levels. That could be a point where you need to start considering averaging for the stock, because it looks like that the stock is on the verge of maybe a final stage of correction on the short-term charts before it gets back into a bounce. But the only concern is that the long-term charts were hugely overbought for HUDCO when the stock was almost at those 350 levels. So which means that you might have to be a lot more patient in the stock. There could be a bounce which may play out for the stock, but then eventually I think the stock should take at least 6 months to 9 months before this trend settles and this the longer term overbought nature of the stock settles down. So it's a good stock, buy on dips close to 225.
All right. And Mr. Chokkalingam, what's your take coming on HUDCO? Do you think makes sense to stay put with this counter, given the fact that this one also has seen a sharp correction, and like the way how Kunal said, at those elevated levels, it did look overbought?
Certainly the valuation comfort is not there. If you look at the price to book value, it is even after the correction trading at an exorbitant level. So if it doesn't mind losing money, it's a good sell. And try luck with stock like a Coal India or Balmalari company, which probably can make up for the losses incurred in this PSU stock.
All right, the next query that I have, Kunal, is on ONGC, where Sudeep from Hyderabad is holding 3,000 shares. His buy price is 305 rupees. He wants a target price to look out for maybe in the next 3 months.
So I think over the next 3 months, I would expect a potential retest towards the 50 DMA for ONGC. That's closer to 318, 320 mark at current levels for the stock. And given the nature of the price correction, I would believe that the stock could probably rally back to those levels before it gets back into a further corrective mode.
All right. This next one is coming in from Madhukar. Wants to know about IRB Infra, 200 shares at a price of 61 rupees per share. What sort of target that one can eye out for the next 2 to 3 years? Mr. Chokkalingam, IRB Infra, she's already invested at the price where the company stock is currently at. What's your target, or what's your take coming in on this counter for the longer term?
Somehow the balance sheet doesn't give me comfort. I may be wrong. So I would rather buy stocks like L&T rather than IRB Infra.
A quick one. Any target that you have in mind then for this one? Because Mr. Chokkalingam is of the view that there are better plays when you talk about that segment.
Yeah, absolutely. I think they're much better placed than IRB Infra. I think I would probably expect that the stock could get into a further corrective mode. So I think it makes a lot of sense to switch towards a large cap name.
All right, the next query that I have, Mr. Chokkalingam, is from Ramachandran from Chennai, and he wants your view on PFC. Wants to know, can he go ahead and buy PFC at current levels? He wants to stay invested for the next 2 years, and any targets if you have in mind.
It's a great stock, no doubt about it. But the valuation multiples have got upgraded enormously in the last 18 months. So my only fear is whether this kind of valuation upgrade we saw would continue to hold. So therefore, if there is at least another 5-10% correction, then it would give a lot of comfort to me to consider buy on PFC.
All right, that's the take coming in on PFC then. On that note, thank you so much, Kunal, as well as Mr. Chokkalingam for joining us in the show and for resolving all of the stock-related query as always.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.